don't rely on your rental property portfolio to finance your lifestyle.
If you're using the property as an ATM, those $5,000 water bills are going to eat 8 months of your profit for the whole year.
No question. I don't understand why people, why do people want to steal from me? But that was early. I mean, I was a year into the business and I didn't understand that, how I should have done things differently.
Whenever we see those problems happen, they do happen with, we deal with it. It's unoccupied properties for the most part. That's what I always explain to people, like, because sometimes I'll have, I'll be working with, out-of-state investor or something. I'll be doing a video walkthrough and they're like, this AC has a cage on it. Is this a really rough area? And it's like, well, it's not a description of how rough the area is or bad or good. We are in a urban environment where if something is laying around, like somebody's going to come and it's just a crime of opportunity. Somebody's going to come take it. And if it's, a AC that's worth $4,000, like, somebody's going to take it if it's not tied down, or somebody's going to, break it who doesn't have a place to live. They're going to break into a place. And, especially in the winter, we deal with squatting issues.
All the time,
it's, but I think what you said is very, very important. And it's something it can be really a challenge because we see it in property management.
Sure.
We're in that like kind of tension in the middle of that. We work with so many owners that want to be really hands off and removed from the property, which I can understand, like, outsourcing tasks, but when it transitions to, I want it out of mind. I don't want to think about what's going on there. I don't care what's kind of going on with that property. And, I don't like it when it's kind of is this certain attitude and then we're left with the job of, well, how can we make this go well for you? Sometimes like that, it requires owner involvement. Like we harp on with our team all the time. Like, you have to have a backbone, not just with tenants, but with owners.
Sure.
Like you have to be able to tell, you are the eyes and ears with the owners. And sometimes that means you have to be the bearer of bad news and say like, hey, this thing you bought from a wholesaler, like it's not as turnkey as they told you. Like it needs a lot of work before we can, kind of rent it for what you're expecting. But yeah, just that
it's the toughest
local
part of your
community.
job. I mean, because I deal with your guys all the time. I mean, it is the toughest part of, I think probably 95%, and that's a made up number, but of investors are out of, they don't care, right? I mean, they don't want to be involved, right? So, I mean, they rely on guys like you, Daniel, to do the job that they need. And that's the toughest job of, telling somebody they got to put a $1,500 this in because it's bad, without trying to fix it or whatever.
Yeah.
I mean, that's, I still, it's probably one of my biggest struggles. And I don't go, unfortunately, I don't go through the exercise until January, which is not very smart because I kind of wait and look at my P&L, when my gal does all my taxes and stuff, just to say, okay, did I make any money? And it's not until January I look and say, I spent a fortune. Like I have a property that every year I have a $3,000 or $4,000 water problem. And it just happens. Great property, but for some reason, something happens on that property. It costs me $3,000 or $4,000, and that's hard when you look at it. When you go back to it, it's like, wow, that's $4,000 I should have in my pocket. Why does this continue to happen to me?
Right.
And those are hard conversations because I always get those phone calls from one of your guys saying, we got a problem.
We got an issue. Yeah.
And but look. I mean, I'm not buying new houses either, so I'm not stupid. I understand that the older the house, the more risk I have.
Yeah.
And I get that. And that's just part of it.
Yeah. And it's great that you have that, like, that balanced expectation of like, hey, I got this house for $17,000.
Exactly.
It is what it is. We're going to deal with it. But, we definitely do work with other clients that, I won't call them out by name here, but like, where it's, they want to have it both ways.
Sure.
Right? It's like, hey, I got this property for, You know, I expect to be, and these are in today's numbers of like, I want to buy a property for 100,000 or 150,000. I expect it to be completely turnkey.
Yeah.
It's like, well,
It's not possible.
I mean, you know, you might not have to do anything right away, but there's going to be some deferred maintenance.
Yeah.
You know,
it's not possible. I mean, you know, I've always gone through the concept of like when I buy a property, and I've bought plenty of $100,000 properties, to say, is it better for me just to go in and like put new furnaces, new air conditioning, do everything by the time I buy it? Because, and I talk myself out of it eventually because I know I'm going to have to, you know, because the reality of it is if I put a new furnace in every unit I buy, now I got to either have somebody maintain it.
Yep.
Because the tenant's not going to do it. And, you know, tenant's not going to put in, you know, new filters and all that. They're just not.
Yeah.
I've left. I'll go buy 2 or 3 filters and just leave them down. They'll never put them in.
Yeah.
You know, it's just they just don't care.
Yeah, I've tried that with mine too.
Yeah, right. So it's part of it. You know, so I don't know what the right answer is. I mean, I put, the problem is I put too much money into my units, you know, and I don't know that unless from a standpoint of getting, when I go to sell, it does help me at that point, but
yeah,
I really haven't sold much of that. So,
Yeah.
you know, the problem is, you know, it's still 5 years down the road or 10 years down the road if I just decide I want to sell something, and you're kind of starting all over again.
Well, to your point about like the long-term play, I think that's good advice for anyone who's interested in getting into real estate, that things might not cash flow right at the beginning, or the play should always be plan for 25 years from now.
Yeah.
Because ultimately, if you're using the property as an ATM, those $5,000 water bills are going to eat 6 months to 8 months of your profit for the whole year.
No question.
Yeah, don't rely on your rental property portfolio to finance your lifestyle.
Yeah, you can't.
We've ran into too many clients like that over the years where
Oh, I'm sure.
we have sort of a list of red flags that we have when a client, like, you know, says a certain thing to us, and one of them is like, you know, hey, where is this month's rent? I need to pay my mortgage.
Yeah.
And I'm like, you don't have 1 month's mortgage payment,
Right. Sure.
you know, in cash reserves to, you know, get through that.
Yeah, I mean, look, and again, that's why I from the day I began, I never looked and said this, because it can't afford to finance my lifestyle. So, you know, I don't want it to. I mean, I want it to be above and beyond, or, you know, every year we do a little disbursement for, you know, and nobody expects it. So when it comes, it's nice.
Yeah.
You know, it's like, hey, here's a check for what we did this year.
Yeah.
You know, and it's just a different philosophy. And I think, look, we've built up a nice, you know, if tomorrow I had to sell them for whatever reason, you know, we'd walk away and make a lot of money on it, and it was worth it.
Yeah. And you know, I think what's great is I mean, you're going to make a lot of people jealous if we talk about the numbers of your portfolio too much.
Yeah.
But I think one of the great things to be learned from it is you, in many ways, like you were investing for cash flow.
Yep.
Almost before people were even kind of speaking in those terms. Like
right.
you were searching for, we've talked about it before, I think, on this, where like now everybody is like excited if they could get something that hits the 1% rule, which
I didn't even know what that meant.
Yeah.
I mean, before I started in real estate, I think, you know, somebody wants, okay, this will be a 2. I don't even know what does that mean?
Yeah.
You know,
and
people, I mean, and now, of course, I look at them, like, to your point, like, I mean, I pass on a lot of deals today if it doesn't make financial sense, even at a 1%, because I've had 3%. I've had 4%, you know, on what I paid for it.
Which is wild.
Wild. And so I felt like everything should be like that, you know.
Well, but I think what's cool is, like, over the last 7 years, you've watched the market change, totally. And you've adjusted to it and adapted. And what you're saying now of, like, you know, if I sold everything, I'd walk away with all this. Because I think there's a thing that happens. We've talked to other people that have grown sizable portfolios that have kind of made the point, like, yeah, I started in this investing for cash flow, and there's a part of me that's like, especially if you're somebody who you are trying to gain some financial freedom, like, there is a reason to prioritize cash flow over everything else, but that starts to shift, I think, pretty quickly when you realize, like, oh, the cash flow allows me to hold on to this. Like I'm
Sure.
not hemorrhaging money
That's
because
right.
that's not sustainable for anybody.
Yep.
Whether you make a lot of money or a little bit of money, it just doesn't make sense. But it's like the cash flow is just a way of holding on.
Yeah.
But the equity is that's the real
Exactly.
treasure. You can check out our full library of episodes wherever you get your podcasts.